Hi friends, welcome to the officer series of BFM. In officer series, we are covering all the subjects ABM, BFM, ABFM, BRBL, all the numericals, objective questions, case studies, all the points are covered. So watch the series completely for all the subjects. Share it with your friends, like the video, subscribe to the channel, click on this like button right now and subscription button. You get various free elements over here, various updates, latest updates directly on the channel. So don't miss. Again, let's start. Today we'll be dealing with Treasury Risk Management, unit number 23 in your module C in BFM. Kindly note all the earlier modules and earlier chapters are also covered. Watch it completely. That's why I'm saying follow the complete channel, subscribe. Very important, you'll see today, very important numericals and objective questions are covered. A dash framework will translate organizational strategy into appropriate functional level goals which can be tracked and monitored at the right levels and frequency to deliver predictable improvement in metrics like ROA and thereby valuations. So which framework will help the bank to achieve the ROA? See, all these things are okay, simple logic. In exam, you have to first remove the scrap from the problem. Remove what is not required. Simple logic is which framework and it will help you to achieve this ROA. Simple. Which framework will help you to achieve the ROA? That's what the question is. Profitability based performance management, business based performance management, revenue based performance management, and asset based performance management. Now, all of you will think everything is correct. What's wrong in it? So, frequency and deliver predictable improvement in the metrics like ROA. Now, for this, you need to first understand the meaning of ROA. Okay? ROA, you have to understand the meaning. Return on assets. Once you understand the meaning and full form of ROA, then immediately things become easy. Return on assets. So, asset-based performance management. Simple, isn't it? For that, you should know the meaning of this ROA or full form of this. So, the answer is this. Asset-based performance management. If you want to get into the metrics like ROA, what is ROA? What are my total loans and what are my total returns from that? Interest part. So that's basically ROA. Got it? To improve ROA and reduce variability in the performance, banks need to take forward-looking windshield-based approach to performance management rather than backward-looking rear-view based, mirror-based approach. This would include which of the following framework? So, forward-looking approach, see, understand the question first. Do you want a forward-looking approach or do you want a backward-looking approach? That's the only question. Do you want a forward-looking approach or do you want a backward-looking approach? That's the only question over here. Yeah. A SMART. What do you mean by SMART? Specific, measurable, achievable, relevant, and timely. KPI framework and hierarchy for each business. Linkage of ROI targets to lower level financial goals, lag indicators, and operational parameters, lead indicators, and mapping them to the organizational hierarchy. Improved linkage between ROI improvement and the compensation and reward structure and all of these. Pay attention to the question first. Observe these options also. SMART. Specific, measurable, achievable, relevant and timely. Full form of SMART. This full form can also come separately in the exam. Specific, measurable, achievable, relevant and timely. So do you need these elements? If you want to measure the performance of any bank, do you need these elements? Obviously you will need it. SMART technique. So this is true. Linkage of ROA targets to lower level financial goals, lag indicators and operational parameters, and mapping them to organizational hierarchy means giving specific targets to specific persons, to a level based person. So do you need that? Obviously your regional manager will have higher targets than you, isn't it? Because the regional manager is controlling the region, you are in the branch. So hierarchy based, so that is also right. So this is also true. Lead and lag indicators. Understand the meaning of lead and lag indicators. That is also important. Lag means what? Which will give you the solution or the analysis after the thing has happened. Lead means it will give you the solution or analysis before the thing happens. What can happen in future? Lead. This is also called as back testing and stress testing. Okay. So here ROI linked to the lag indicators and lead indicators. So that is also true. Improved linkage between ROI improvement and the compensation and reward structure. Target based, simple, target based. You do this much, you will get this much. You don't do this, you won't get it. Should we do the same in the banking? In fact, it is done in the banking. Right now also it is done in the banking. Okay, so the answer is all of the above. This is the right answer, D, all of the above, because all of them are compulsory if you want the bank to grow, isn't it? In a final phase, starting in the 90s, the government set up Narasimham committee to manage the major reforms including liquidity standards in the banking sector. Which of the following is not the recommendation made by the Narasimham committee? Kindly note, Narasimham committee was an important committee in 1991. This committee, because of this committee, whatever banking we are seeing today, the speed, the private banks, the competition, it is because of this committee. Earlier, before Narasimham committee, the Narasimha Rao government, okay, that opened up the economy. Before the Narasimham committee, the banking was very sluggish, very sluggish. Now the banking has changed a lot. So, which of them are not the recommendation? Regulation of interest rates, reduction of CRR, reduction of SLR, opening up of the sector for the private and foreign players. What was not the recommendation? Kindly focus the question. Not the recommendation. Narasimham committee was actually against this. So you want not. Narasimham committee was against this regulation of interest rate. It clearly said that RBI should come out of this job of regulating the interest rates. Before that, if you see, banks were given the FD rates also by RBI. FD rates also. Loan rates were given, but FD rates also by RBI. Means RBI gave literally the loan rates and FD rates to the banks. So Narasimham committee was against this, and this was not the recommendation. Remaining three were the recommendation: reduction in CRR, SLR, and opening of the sector for private banks. Among the below mentioned ratios, which of the following is not a part of common profitability ratios? So profitability, which of them is not the part of profitability ratio? Now for that you need to first understand what are the types of ratios. Ratios are of three types mainly: profitability, solvency and turnover. Okay, profitability, okay, second is solvency, and third one is turnover. TOL, write it, turnover. These are the three main types of ratios in ratio analysis. Profitability has 5 types of ratios. Okay, PE ratio, PE and this EPS. Okay, gross profit, net profit, and overall profitability. These are the 5 ratios in profitability. PE, EPS, okay? So, PE, EPS, gross profit, net profit, and overall profitability. Got it? Next. Now, which of them is not? Which of them is not? Kindly note, not a part of profitability. So, 5 ratios I gave you regarding profitability. Gross profit, debt margin, operating margin, and return on assets, return on sales. So, which of them are not the part of profitability? Gross margin, gross profit ratio, it is there. Operating margin, operating profit, it is there. Overall profitability means operating. Return on assets, again it is there. Debt margin is different. Debt margin is not the right answer. It's not the part of these 3 ratios. Okay? It's actually, you can relate this to debt equity ratio. But that will be the part of debt equity, that will be the part of solvency, long-term solvency. Remaining 2 I'll explain you whenever some topic comes. Okay? So the answer is this. Required answer is this. Debt margin is not the part of your profitability ratio. Got it? This is not the part. So got it? Debt margin is the answer. Debt margin. Okay? Among the below given, which of the following actions to be taken for implementing the strategy objectives? Strategy objectives, okay? Implementing the strategy objectives. So, long-term strategy. To build a benchmark issues by issuing significant volumes and take advantage of the liquidity premium. Difficult words, isn't it? Elongate the maturity of the debt portfolio. Build a balanced maturity profile and supply along the yield curve, and all of the above. Strategy means you are thinking of long term. Whenever you are thinking of long term, the first question comes in mind is yield curve. Yield curve is something which is very important for long term survival of any bank. So obviously this answer will be there. Build a balanced maturity profile and supply along the yield curve. Elongate the maturity of the debt portfolio. This is also one of the important strategies. If you have the loans of longer duration, okay, loans of longer duration, and similarly deposits also of longer duration. Not too long, because deposits too long is always a risky part. If you have it linked to the repo rates, then it's okay. But deposits in our country as of now, we are not in the repo rate style of deposits. Loans we have repo rates. So always the more longer you have the loans linked to the repo rates, the better it is for the bank, isn't it? So this is also elongate the maturity. That is also true. So now if 2 are true, obviously the answer will be all of the above. But for that you will have to check first whether this first one is also true. To build a benchmark issues by issuing significant volumes and take advantage of the liquidity premium. If you are having a liquidity, huge liquidity you are having, means you are having excess funds. Take advantage of that. Liquidity means what? The bank is having excess funds. So if I am having excess funds, I will lend it at a lower rate. So take advantage. All of the above. Correct? D is the answer. Which are the reinforcing pillars of Basel II revised framework? Minimum capital requirement, supervisory review, market discipline. A and B, B and C, C and A, B and C. See, Basel II revised framework. So which are the pillars? Is it minimum capital requirement, supervisory, market discipline? This is the easiest question for CAIIB level. This is the easiest question for CAIIB level. Think over it. Let me see. This you have done it in your JAIIB also, isn't it? So the answer for this is all the three. All the three are important. All A, B and C. Okay, all the three are important. In fact, Basel III also has the same ones. Only in Basel III what you have, everywhere you have the word enhanced. Enhanced. Everywhere. Here also, here also. Basel III has only one word which is added, that is enhanced minimum capital, enhanced supervisory review, enhanced market discipline. Pillars are same. Okay? Which of the following stress testing techniques specifies the shocks that might plausibly affect several market risk factors simultaneously if an extreme but possible event occurs? So, which will give you all the events occurring at the same time? All the events. It can happen. Repo rate is going up, then there is a war going on, GDP is going down, your bank is facing the problem internally. All the things can happen at the same time. So, simple sensitivity, scenario analysis, maximum loss and extreme value theory. Which one will give you the scenarios of various market risk factors, several market risk factors simultaneously? Many of you will get confused over here between this and this. Or some of you might think this also, maximum loss. Okay? Maximum loss also, because some of you might think maximum loss, all the things coming at the same time, so maximum loss. But it's not the answer. Maximum loss is not the answer. EVT is also not the answer, because EVT is different. EVT is not all the things coming at the same time. EVT is basically the market crashes like never before. That's called as a tail concept. So this is also not true. The true is this one. Scenario analysis. Various scenarios you have to consider and take various options into consideration. Various points can happen. COVID can happen, your interest rates can suffer, there can be a war between various countries. All the things can happen. So that's why scenario analysis is the right answer. Scenario. And in that also, in scenario you have one basic method, means various scenarios are considered over here. Okay? Means all good and bad scenario. What is scenario basically? You are basically combining various elements. One name in that is Monte Carlo simulation. Monte Carlo is one of the best methods for scenario. Okay, you have a lot of questions on Monte Carlo. Kindly note. Monte Carlo. Monte Carlo simulation. One of the maximum asked question in the exam. Okay? Read this. Which of the following statements is or are true? Which of them is or are true? Assets and liabilities in the trading book are held until maturity. You want correct ones, huh? Mark-to-market system is followed in the trading book. Derivatives are held for trading in the market or over the counter are not the part of the trading book. Derivatives that are held for trading in the market or over the counter are not the part of the trading book. Trading is subject to adverse movement in the market prices until they are liquidated. So these are the four options. Which one of them is correct? Think over it, everyone. Assets and liabilities in the trading book are held until maturity. Is it so? Assets and liabilities in the banking book are held until maturity. So this is false. Mark-to-market system is followed in the trading book. True. What is mark-to-market? Mark-to-market means notional profit or loss. Suppose if I purchase, let's say a Reliance share today, example I am giving, a Reliance share or any company share. Let's say I purchase it at 2000 rupees. then tomorrow I'm not going to sell it. But tomorrow if the price goes down from 2000, it goes down to let's say 1900. Am I selling it? No. But I have a notional loss of 100 rupees. So if I have this notional loss, and if I am in the options market or if I am in the futures market, then I'll have to pay that loss from my pocket, from my savings account. That is called as mark to market. The reverse is also true. If I buy it at 2000 and tomorrow it goes to 2100, I'm not selling it. But the difference between the same is given to me. This is generally done in the futures market. Futures is also always mark to market. Okay? Derivatives that are held for trading in the market, over the counter, market or over the counter are not the part of trading book. What are the types of derivatives? One is in the market and second is OTC. There are only two types of derivatives in banking. One is ETC, second is OTC. Exchange traded, and second one is over the counter. So if both are not there, what is mentioned over here? Derivatives that are ETC or OTC are not the part of the trading book. Then what is trading book? What is trading book? Trading book means anything, it's also called as a proprietary book. This is also called as a proprietary book. Proprietary means what? Here I am buying the share, buying the stocks, shares or commodities or bonds for my own profit. Own profit. I as a bank want to earn the profit. So that's why I'm buying it. So derivatives are held for trading in the market or over the counter are not the part of trading book. So that is false. That is a part of trading book. Okay? So 2 is correct up till now. Trading book is subject to adverse movement in the market prices until they are liquidated. What do you mean by this word liquidated? I'll give you a simple example. Again, the same example. I buy a share of, let's say, Reliance or any company. I buy that share. So, up to what time will I be concerned about the price of this company? Suppose if I buy it at 2000. So, I will check the prices daily or weekly or whatever frequency it is. What is the price today? 2000 I had bought. Is it 2200, 2300? Is it 1800? Is it 1700? I'll check the prices. But up to what day will I check? Suppose if I sell the share after, let's say, 5 days. Sell that share. I had purchased at 2000, now I have sold it at 2200. I have sold it. So after that, will you check the price again? Unless you have to buy it again. Forget the buying part. But will you check it with the risk factor that whether it is going up or down? You will not check because you have already sold the share. That is known as liquidation. So you will always check the price, or it is always subject to market movements or market prices subject to you have not liquidated it. So 2 and 4. 2 and 4. This is the correct option. 2 and 4. Again see this question. Very important one. Okay. So now the Republic Day sale is going on Adda 24/7. See, it's a huge sale. Republic Day price drop sale. For more information, call on this number. Don't forget this number 098 198 19247. The prices of CAIIB Mahapack have been brought down to 6550. The lowest. And what do you get in CAIIB Mahapack? You get all the 15 batches per subject. 15 batches per subject. Then you get, if you purchase the Increment Mahapack, you will be getting not only e-books, but you will be getting physical question banks as well. Physical formula banks delivered at your home for all the subjects. E-books, mock tests, live classes. Mock tests are same as that of your main exam. Same. On all the Mahapacks, right now XXX validity is going on. Means you buy for 5 months, you get it for 15 months. You buy for 8 months, you get it for 24 months. So into 3. But for that, you'll have to use the code Y432. Never forget this code, Y432. Always purchase by downloading the app. First, download the app. It's available on both Google also and iPhone also. First, download it because there you will be getting 1% extra discount. See this, I'll show you. And the new batches of Adda 24/7 are just starting. Okay, they are in the starting phase now. Look at the new batch. See this. This is for JAIIB and the new batch for CAIIB is over here. See this, Officers Pro batch for CAIIB June. Don't miss this batch. On 23rd of Jan, starting. So join it ASAP. All the ebooks, mock tests, live classes, everything is there. All the subjects are covered. Use the code Y432 for joining this. See, I'll show you. Click on buy now. Use the code Y432. You will get highest discount. Y432. Click on apply. Look at this. Highest discount, 82% discount you are getting, plus 1% extra by downloading the app. If you purchase the Mahapack which I was showing you, say this. If you purchase the Mahapack, CAIIB Increment Mahapack, right now use triple validity offer will be there for this Republic Day sale. Okay? So it's a huge thing. You buy for 5 months, you get it for 15 months. Also look at this. You buy for 9 months, you get it for 27 months. If you click on buy now and use the code Y432, see this. Again, you are getting 82% discount plus triple validity plus 1% extra discount by downloading the app. So don't miss that 1% also. Download the app first.